to pick the right areas to trade from, like selecting this exact order block right here, the reasoning behind it, and how we avoid all of this other liquidity. As always, guys, to show your support, hit that subscribe button, like this video, and leave a comment down below what topic do you want to see next. So without further ado, let's get straight into it. Now, for those of you who don't already know essentially what liquidity inducement is, it's just another form of money. It's just another word for money. Essentially, it's where is the money in the market? Now, you already know the money in the market is going to be wherever the stop losses are and wherever the orders are. Because when somebody gets stopped out of a position, that money then gets taken by the market. When somebody gets tagged into a position, that money also gets taken into the market. So the algorithm that controls this banks, that is also controlled by the central banks, that make people believe that they think they know what's going on with price action. And essentially, most of the time, those people are wrong. And the algorithm purposely designs those scenarios so it's able to take all of their orders and move in the opposite direction. The algorithm will always move to where there are orders in the market. So when you see liquidity stacked up, especially in the example that I'm going to be breaking down with you today, you know exactly what's going to happen because it's already programmed by the algorithm. It's literally automatic. So a couple of examples here for what liquidity would be. Number one, we have this forming trend line to the downside where we see this low is lower than this low. So the lows are increasing, right? We have a low, we have a higher low, and they're expecting again another higher low. And then if you look from the downside, you can see we have a high, a lower high, and a lower high again. So you can see the lows are decreasing. So two sides of the market here. There are people that think price is going to go higher because if you just zoom out, you will understand that price looks like it's going up, right? So to one side of the market, they're thinking, oh, I think I know what's happening. Price is going up. Price is starting to see, some level of resistance here. So maybe we can look to get in and take out the highs because they're probably going to be getting taken. Then there's also one side of the market that are looking at this and they're looking at, okay, we have a high, we have a lower high, we have a higher high, higher low, higher high, and then you can see we have a break of structure in here, an order flow shift down here. They're looking at this and they're saying, okay, I actually think price is going to decrease. And the funny thing about this is a lot of the times retail traders know what direction the market is going in. The problem is where they get involved in the market and where they put their stop loss. That's their biggest problem. So for those of them that knew the price was decreasing because of the internal breaks of structure, like this one, or like this order flow shift here, which I'll explain in more detail in a moment, they were on the right side of the market. The only problem is that they expected something like this trend line right here to not be broken. They expected it to be respected, or the traders who traded something like a double top. A double top is essentially where price taps one level, pushes away, and acts as a level of, a key level of resistance. Then price comes back in and taps the same area and pushes away again. People are expecting this level to hold. It's an important level for whatever reason it is that they made up, because price looks like it's respecting that level. So that is essentially an area where someone would be looking to get involved in selling the market with their stop losses, likely just a little bit above here or just above the high in general, which is understandable to some degree. However, if you look at it through the lens of a smart money trader, which is exactly what all of you guys are here to do, is look at the market through the eyes of the ones who are controlling it. This is how we understand it. First and foremost, we need to zoom out. Because by zooming out, you get the proper representation of the order flow. Now, the order flow, as you guys already must know by now, is the most important component when it comes to successfully trading these markets. We take our swing low. our swing high. We see right now that price makes a new swing low before starting to reverse to the upside. So we know our order flow is bearish. So funnily enough, we're probably expecting the order flow to continue. Now that's the order flow, which is the external swing points. As you can see, there are many internal swing points that dictate the internal trend. So let's go into a little bit more detail and look at that. We know that the order flow is bearish. Now we come in and we look at the internal trend. We can see we have, let's just start at this high. Low. Lower high, lower low. Lower high. This high right here is lower than this high. So technically right now, if price wants to continue in its trend, it's going to go ahead and break this low. Fails to do so. It puts in a higher low and then a higher high. So when price breaks structure, like so, we now know that the internal trend has shifted bullish. And because of this, it's likely that the order flow is starting to pull back. So we can be expecting bullish price action internally for a while, which is exactly what you see right here. Price then goes on, makes a higher low, a higher high, a higher low, and a new higher high. So up until this point, price is completely, I'm gonna go ahead and replay this one moment. Up until this point right here, price is entirely bullish. Now, interesting thing happens because price then goes and puts in a lower low. This is called an order flow shift because we have shifted internal structure in alignment with the order flow, which to us makes us think that it's highly likely that this low right here could now be looking to get ran for liquidity. We have to understand is at every high and every low, there is a lot of liquidity. So at this point, we can see the order flow shift. You have to ask yourself, okay, as a smart money trader, where is the liquidity? Now, we already know what liquidity is. It's essentially just areas where retail traders are looking to get involved in the market. And by the way, retail traders aren't just traders such as me and yourself. Retail traders are also smaller banks, private institutions. Those guys have traders inside of their institutions trading for them. And believe it or not, a lot of them try to predict the market with these very simple mechanics such as trend lines or key levels, support and resistance. And yes, believe it or not, this is how they try to trade currencies. And don't get me wrong, with correct risk management, these strategies actually can work, but they're just way less profitable than smart money. The first thing that I see when I look at this is, I don't know if you guys noticed, but we have very clear internal liquidity. So that to me right there is levels of liquidity because I'm looking at that and I'm seeing, okay, price is decreasing, but it's also showing a level of resistance, right? Price taps in once, push it down, taps again, push it down, taps again. And it's also an internal trend line. So with that, you know, it's likely to say that there is liquidity that lays above this high, which is also interesting because we have a perfectly formed order block right here. If you don't already know what an order block is, we go over this extensively in other videos or also in our private mentorship. We have liquidity, so we also have another order block right here. But because this order block right here is sat just below, all of this liquidity, we also know this is a smart money trap. Yes, smart money traders are also part of this liquidity. Of course they are. Because if you don't understand liquidity, you probably are going to be the liquidity. So yes, this is also liquidity. So I'm expecting with all of this liquidity, there's only one area of price where price could actually respect. And that is this order block right here. And that is essentially where I was looking to take my trade. And where was I looking to target? At least down here at this low, because the internal trend has shifted, right? We was making higher highs, higher lows, but then we've shifted. So technically now we should come and tap here and make a new lower low, lower high, lower low, all the way until eventually at some point we come and take the external order flow swing low because the order flow is bearish. So that was my thought processes when I was reading this market. I had also seen that we had took the level of liquidity and failed to tap into my entry right here. So at this point, I'm just patiently sitting and watching the market and understanding another form of liquidity is when the price ranges between a high and a low. And when price just ranges inside, what it's doing is it's building liquidity on both sides of the market so that when it wants to go, it's going to sweep one side to go the other. And that's exactly how it works time and time again. You can go and test this for yourself. So when I started to see that price wasn't breaking the highs, wasn't breaking the lows, I was just paying attention essentially to, okay, what is it doing? Very clearly, as you guys can clearly see, it's perfectly forming liquidity. It taps in, it makes a higher low. Then it makes a lower high. So you can very clearly see that price isn't taking out any highs or taking out any lows. It's kind of just doing this rangy movement, building liquidity, liquidity down here, liquidity up above here, perfectly aligned with our order block because we're expecting essentially the sweep of liquidity, take out all of the liquidity, which is going to tag us into our trade, and then go and take the liquidity down here. And this is what we call LTT, liquidity to take and liquidity to target. It's a very special entry model that we here at Prosperity Academy use when you want to get into a trade and how to select the correct order blocks. It is having a level of liquidity to take, which is all of this liquidity in here with the stop losses right here, and then a level of liquidity to target, which is all the way down here plus this weak low. Also, one thing I noticed, an additional level of liquidity is when you draw this high down to like this, you can see what price is doing is forming what some traders trade, which is some sort of wedge or something like that, right? It's where price condenses and starts ranging like this until eventually it gets to a certain point where price breaks out and then people will buy the breakout, or it breaks out to the downside and people will buy the breakout to the downside. So there was so much level of liquidity that was building. We knew that there was stop losses here, stop losses here, stop losses here. And we know that as soon as it breaks out to one level, it's going to tag someone into a trade. And then it's going to go the other way because it always does. So that is exactly how I used this order block right here to target these lows right here and make 1 to 13 risk reward in a matter of hours. And you can see with the level of precision of the wick. The wick is very clearly just a buy to sell at a fast pace. Price buys to clear out the liquidity, and then it tags this level. Now, what makes this level so important is that there are already orders in this box right here. There are already orders from the banks or institutions, the one that actually have the money to move the market. So what happens is when price comes and taps the area where the orders are, the orders get triggered and the sells that were resting inside those orders come into the market, and that's why the market pushes down so aggressively. And so all we are doing is understanding where are the banks and how do we put our position with them and let them take us. Let the whales take the small guys for a change instead of the other way around, like these retail traders, where the whales are taking them out. How can we ride with the whales? By trading this exact formula that I've just showed you guys right here. I hope you guys did enjoy that video. If you did enjoy that video, smash that like button, hit the subscribe channel, and don't forget to come and join us